Okay, great. So from our technical team that works restlessly to make sure we have an amazing experience, we have had the confirmation. So hello, everyone. Good afternoon, and welcome back to the second episode of Decoding Capital, our weekly LinkedIn series where we break down what's happening right now in the world of private equity and private debt. Of course, we will try and make sense of the mechanics behind the headlines. I am Andrea Cosentino, and in just 30 minutes, we're going to walk you through the biggest news stories of the week, not just what happens, but why it matters to you. Usually, we connect dots between market trends, practical advice for GPs and LP, regulatory changes, and how all of this impacts you. Each week, we will also bring new visual frameworks that, as you know, are a way for us to tell you a bit more of a story to help make sense of complex trends. And also, of course, we will provide at the end of every session the notes from the session so that you can keep learning. But now, jumping in, of course, make sure that you comment and you you become part of the conversation. We have a lively chat. We're going to try and answer all the questions that you guys post as we go through the event tonight, this evening. So jumping in, I have to say I came back from Riyadh last night and I was feeling really, really lonely already because I love the Middle East. So I thought, hey, why this Friday we don't talk about the GCC again? So, I feel a bit less sad. And that's why we call this event today Exploring Access Strategy to GCC Markets. And I want to welcome today's guest, Walid Hayek, Managing Director of Fundrock Saudi. Walid has an incredible background in private markets and institutional great engagements. Walid, do you want to add a bit more about your background?
But the background, I can say I have decades of experience in the MENA region and setting up the whole capital markets. One of the pioneers of that business in the Middle East and North Africa and the UAE, Saudi, etc. And pretty much a deep understanding of the regulations of what's required and comparable regulations with those that are applicable in Europe and the US and the rest of the world.
That sounds amazing. Well, let me start with the first question there, and the visual starts to help us about market trends, size, and the players that we have. Reading the news from April until now, in the Middle East, we've seen that we had KKR appointing a US general called David Petrus as a chair of the Middle East business. We've seen Blue 5 Capital closing a 2 billion GCC fund, and Magnet reporting that 45% of the MENA private equity transactions are actually happening, they happen in H1 of 2025 in Saudi Arabia. Now, these news tell us a very good, consistent story, right? There is a lot of trend going all the way to the Middle East, as we know, especially the GCC region GCC region for many, many reasons. But what I want to ask you is, starting from the appointment of the KKR player, as well as all the other news that I described, what does that say us about the kind of localization of private equity firms and private funds in the Middle East? And also, which sectors you think are driving the demand for such partners in the region?
Okay, very large question. First of all, thank you for receiving me. And I would say very quickly that the region is going for a version 2.0 or 3.0 almost across sectors. And that is following the global transformations that we're seeing in terms of AI coming into business, digitization, and other types of transformations in the globally, even geopolitical transformations. And of course, these are trickling down on every sector in the GCC, including Saudi Arabia, the UAE. If we take the events that you spoke about by reverse order, Magnet, 45% of private equity deals happening in Saudi is pretty much normal, as the Saudi GDP is more than half of the regional GDP and the stock market as well. So it's pretty much in line with the figures that we have, and even a little bit below. It should be 50% and above. This tells you about how fast the region is moving into the new version of what it's going to be. Now, having said that, the region is also showing growth that is almost exceptional globally. And that's why, and the size of the development is really, really at a global scale. I remember 10 years back or 20 years back, $1 billion deal was very exceptional. Today, it's every other day. So the size, the magnitude, the capital markets, for example, the Saudi capital market is almost $3 trillion market cap. Abu Dhabi is 1 trillion. So this has attracted the interest of the largest managers. And when you talk about scale, you cannot manage it remotely anymore. You have to be on the ground. I'm not referring to the remote working in the office. I'm saying remotely out of New York or out of Tokyo, or out of London. You have to be on the ground. You have to have boots on the ground and see what's going on. And even with that, you will need some help from people who have been here before you and who can guide you and show you the way. So Magnet 45% in Saudi is normal. Blue 5 is an initiative I working at Apex, Fundrock, Manco in the GCC. I'm very familiar with, and the appointment, senior appointments in KKR. We've seen that across the board. We've seen teams relocating to Abu Dhabi or Saudi from big players like Brevin Howard, like Blackstone, BlackRock. Everybody's here. They have boots on the ground, all of them.
Yeah, and I think, look, just to add more context, I did actually, for those who follow me on LinkedIn, a weekly post about entering GCC market from, different perspective, not just private markets. I think my latest post was very much about understanding that, the way business is done in the Middle East, no matter the industry, is not as transactional as the West. So you actually need people on the ground. You need to be there. You need to be present. You need to build those relationships in person, which is why I read the appointment of the KKR manager also as a way to bring someone that, funnily enough, is a general, right? So someone that has very tactical thinking, can act as a sort of a diplomat as well, part diplomat, part executor in the region, which I think says a lot about the KKR understanding of how the business dynamics work. I think it's very important. And as you said, yeah, Saudi accounts for most of the GDP of the region. Also, we need to think that, if I'm not wrong, for about 4.5 trillion, looking at my notes, of sovereign capital is actually concentrated around 5 or 6 players, which means, there is a lot of concentration, meaning you need to be very strategic on the way you engage with very few players. And if we look at the infrastructure, the sectors, right? I mean, is countries and is a country Saudi, but mostly the GCCs are countries that are building a lot right now. So they're renovating, they're investing a lot in infrastructure. So that makes sense because, yeah, of course they do have, as I like to say, almost infinite money, given what is their main source of income. But for sure they need also external players to chip in. I mean, just an example, as I mentioned, I was in Riyadh last week. I know you are based in Riyadh, and I even took the metro for the first time, and it's an amazing piece of infrastructure, right? So clearly, this money are going for the community, they're going for the ecosystem, which creates a lot of value per se. Getting into more details, another news is about Stonepeak, and that's why I also connect with my last piece on, where the money is going. Stonepeak signed a 1 billion strategic partnership with the Arab Energy Fund to drive infrastructure investments across the whole of the Middle East. This goes back to May. Now, what I want to know from you, more from an operational perspective, how are operating partners used in the due diligence in the integration planning on this type of deals, so very large infrastructure or energy deals? And do you think they're more relevant pre-deal on the due diligence, post-deals, so essentially post-close implementation, or you think they actually now are a fully integrated partner all across the board and the process?
Also a very wide question. I mean, there are all sorts of case studies and engagement models. depending on how the structure of the investment vehicle is being put together. Is it through funds or is it directly investing in those infrastructure deals? Are we talking about an infrastructure fund that will develop several projects under it, or are we talking about single project kind of investment vehicle or special purpose vehicle or fund? But in any case, of course, there is an initial due diligence, preliminary due diligence that touches the regulatory aspects, the legal aspects, the protection of IPs, protection of investor interests, protection of branding, etc., the know-how and all of that, and on how to split the economics. And then there is a due diligence on the business itself and on the relevance of the investment and the rewards and the risks and the geopolitical risks. And then you have the credit insurance and other types of hedging and protections that the investors can utilize. Now, this is a perfect JV between a sovereign wealth fund, let's say the Arab Energy Fund, and an industry specialist that are going for. So you have the technological partner and the investment partner that are putting their heads together. And the Arab Energy Fund is a specialized sovereign wealth fund, so it's all geared towards energy and energy development. And of course, there's a lot to be done in the traditional energy and in the alternative energy sector. So, of course, that was an obvious move to be expected in the market. Now, from where I stand, where I come from, which is the guidance in terms of governance, in terms of regulatory framework for asset managers, for fund managers, for investment vehicles, we can be involved early on in the strategy and the whole strategy and roadmap with those who are putting together the investment vehicle, because there's a lot at stake. There's a lot of considerations. Do you want to access investors across the GCC, from outside the GCC and within the GCC? Those are different structures. And it has to do also with the asset class that you will be investing in Saudi, the UAE, or other parts of the GCC. Do you have access to it in a compliant manner, in a legal manner? So it's both ways. It's from the investors, how to set up a structure that is compliant to be able to attract investors from different types of jurisdictions. And on the other hand, on the deployment of the investments, what are the vehicles and the conduits that you need to utilize to access those asset classes, whether it's real estate, energy, data centers, or private credit, or all sorts of asset classes that we're seeing.
And again, in this dynamic, which I mean, you have explained very clearly, another thing that I've noticed, and this I will cross a bit also with the next question, but I really think they go kind of along. Not only we see external partners coming in, but we also see the local partners, the local funds that are changing the way they work. They are getting more into larger deals, not only abroad, just buying football clubs, for example, but they're getting more into like investing into into the region, into the projects. Now, would you say that probably that's just the way I look at it, but would you agree that maybe it's also the level of specialization of funds in the region and the level of talent that they are attracting? Because of course we've seen a lot of workforce coming from the Western countries, especially UK. There has been a kind of a mass movement of specialists, not only from a capital perspective, but also from a human capital perspective. So we've seen a lot of experienced private equity, private markets people just moving in the GCC region. Would you say that the local funds are also becoming more independent, and they're not just capital providers anymore, but they act as a co-strategist? They kind of want to have real time, hands-on. They want to take more part to the deals.
I would say that let's start. I mean, like there are many aspects of many angles of how I can answer your question. I'll try to cover a couple of those, but not all of them, of course.
Of course.
There's one aspect of things that the drive and the transformation or the initiative, the big initiative that happened in Saudi has forced everybody in Saudi and in the region to shape up, because Saudi is now coming back as a big player, as a very serious competitor to whatever was existing out there. So people in Saudi are under pressure by the authorities here to shape up, and people around Saudi are under big pressure also to shape up to preserve their positions as competitive positions. And that's the healthy competition that's happening in the region and the impact of it. And this is why you're going for version 3.0, I'm going to say, across the board, and we are seeing it in the investment management universe. Like lately, Saudi has come up with new regulations for the for the asset management, for example. It's a serious step up, and it's going to be putting other jurisdictions under pressure, other regulators to also shape up their asset management regulations. That's as an example.
We will talk about that later. I'm going to ask you, yes, a few questions, because that's an interesting piece.
Yeah. And now, if I lost the guy.
Yeah, no, we were saying in terms of structure, right? You see a 3.0 kind of structure, yeah.
Yeah. So there is, of course, there is a need to have people on the ground when you're talking about this type of magnitude of transactions going on and of money under management. You can imagine that the sovereign wealth managers that are now allocating much more money to the local markets than they were before. I'm talking 20 years ago and 10 years ago. I'm sure I don't have the figures about the percentage of allocation, but I am sure the allocation to the local markets has become much, much bigger than, let's say, pre-subprime or COVID era. And because there is so much at stake, because there is so much money, risk, exposure at stake, there's no room for errors anymore, or the room for error, tolerance for mishaps is becoming lower and lower. So you can't have huge amounts of money handled by people who are not here, who are not, accessible, who may disappear one day and leave with the money, God forbids, or who are not really involved, entrenched, indigenous, and understand what's going on.
What would you say are the main again challenges, I guess, for the local players right now? Because they have access to money, they have access to talent, but you in your position, I'm sure you see a lot of challenges. Probably that's why you guys help. For local players and for external players, I think they're different.
Yes, local players, they know where the region is coming from. They have long history here. They have insight. They know the type of problems the region can go through, and those problems don't come back as the same. History doesn't repeat itself, but it rhymes, right? I mean, like those problems, you can have similar problems in the future in a different, new shape, new way. So they have the background. What they need, and this is where they are put under heavy pressure, is to show that they are technically ready for what's coming, what's next, and they need to shape up. You have two to three aspects of things. Number one, they are allocating more money to the region because this is where things are happening. If I'm Saudi, if I'm UAE national, if I'm Qatari, etc., I would say in my asset allocation, I would be looking at the GCC as one main area to deploy my money because a lot of things are happening here. And on the other hand, they have the pressure from the competition, because the whole globe is coming here, to shape up in terms of technical know-how and the way they're doing things, the governance, the ECG, the new way of business, best practice, etc. These are not to be disregarded anymore, and everybody in the region is aware of that. The whole culture here is about that. And number three, there is a succession planning, longevity of the businesses. We're coming now at the second and third generation of big family groups that were owning traditional large businesses. And those businesses are facing strategic challenges across the board. Let's say if I'm a family group and I can think of a couple that are real conglomerates that are maybe in 50 or 100 different lines of business. Can you imagine the headache and the level of work that needs to be done to follow up on 50 lines of business and figure out each one of them where it's heading with the big transformation that are happening globally? Will that business be there in 5 years' time, in 10 years' time? How do you make it survive, et cetera, et cetera? So, and that's why when we talk to global managers and global investors that are coming to the region, we tell them it's about, job creation here locally. So you need to build local teams. And it's about transfer of knowledge and know-how and transfer of technology. So the region is hungry for that. And all the projects that tick those boxes will have the attention of everybody here.
And I mean, it is definitely valuable. I guess I would just want to link and get back into probably what is the last question of the day. As I have anticipated, it would have been around regulation. Now, we see a lot of regulations, a lot of changes all across the region coming up. We hear constantly about the UAE, especially, of course, leading the way. We see Saudi as well being, very forthcoming about new regulations, new ways of also using regulation as an enabler. And it looks like it's kind of working. Also because they're not extremely strict compared to, for us now in the UK, we're not part of Europe anymore. But as a rooted European, of course, knowing how Europe works, Europe loves to regulate everything. Sometimes maybe too strict. Sometimes they try and enable. But I look at the Middle East as a place where they're really, moving really fast on a lot of things. Now, of course, regulations across the continents are different. There is a lot of differences across from finance all the way down to artificial intelligence and the way, even data is regulated. And this brings a lot of complexity for an external player that wants to enter, but also like a local player that probably has been going on for years without having to face like any regulatory pressure. And now they find themselves having yet these other problems, these other admin to deal with. I guess, where does player like you, operating partners, are useful in your opinion to navigate the local governance, the compliance, stakeholder relationship with the regulator maybe? And do you see operating partners becoming an integrated part of the governance of funds that want to either enter or even funds that exist that probably they didn't really have this type of infrastructure before?
Look, it works on many different ways. One way to do it is to really have feeder structures for local managers, or let's say you launch a local MENA fund or Saudi fund that invests in infrastructure, etc., and you want to attract investors from Asia, Europe, the US, and England. You would need feeder structures to be able to attract those investors from Asia, from the US, from Europe, that feed into that master fund that you will have here. And it works also both ways. If you are a foreign fund manager and you have a fund that is based in Ireland, in Luxembourg, or somewhere else, and you want to attract local managers, local money, local asset allocators to invest in that fund, you will need a local feeder to invest in the foreign master fund. So it works both ways. For succession planning and ensuring that those family groups are more structured, they could use the fund structure to put in place a better governance of their wealth. There is what we call access funds. For example, the real estate sector is not open to foreign investors, or there are caveats to that, and there are areas that are open, areas that are not. You will need to go through special purpose vehicle and investment funds to do that. Actually, in Saudi, cross sectors, in private equity and in private credit, you will need special purpose vehicles. You need to set up funds to access that market, to be able to deploy the money. So there is, as I said before, there's the aspect of being able to go see the investors in a compliant and a regulatory way. And there's the aspect of being able to deploy the money in the sectors that are closed or not open to foreign investors completely. And this is where you can be a conduit to channel the money into the local economy.
Yeah, I mean,
This is how we help. We can, I mean, like, I don't want to pitch about Apex Group, but we're avoiding that. But similar
but
group.
you can share for sure. You can share how you do work. That's fine.
I have Apex written on my hand, right? And it's the fact that you are present in different jurisdictions. Let's say if I'm talking to someone who's based in Luxembourg, I know his regulation very well.
Yeah.
So I can relate, I can explain to him what is applicable, what's not applicable, and have a comparative type of analysis of the regulation here versus there, and explain to him in his own language what can be done and how it needs to be done, and similarly here, because we are local, we know the regulation here, we can guide local managers on how they can develop globally, because there are local managers that are, at the edge of becoming global managers and going global. And this is where we can help both ways. Now, in different activities, we can be only, fund accountants and administrators, etc. We can be part of the strategic thinking. We can be part of the brainstorming on how to structure things and have a roadmap on where we want to be in 5 years' time and help the clients develop that roadmap.
I mean, it's in the gold rush, apparently who made the real money was the shovel sellers, right? Not the people running after the gold because they probably didn't find much gold. So I guess the gold is there in the Middle East, clearly. Like it's not, fake news, but
I would say
definitely.
even literally.
Yeah, exactly. But like it looks like being a service company right now is definitely, the right place to be. And I see the same model applied also like into businesses that want to expand. I do have local partners in the Middle East where, we are a service business and, we do consulting, education, events, and we see that, our local partners, what they really, really do, they facilitate externals getting into the country, right? Because it's very complex. And this complexity applies really across the board, especially for those that were not born into the culture, that probably, they heard the news, they read a lot of things, but they didn't really experience, neither from a formal regulatory perspective, nor from an informal, cultural perspective. So it definitely sounds like, being in your position is being in the right place right now. And I want to ask you a bit of a teasing question, which is how in all of this, right? And maybe you mentioned it really, but just to wrap it up, because again, we said it's not a sales pitch, but as much as you guys are an operating partner and a service provider, there is many others out there. And if I am a fund or a private markets person that is thinking to expand into the Middle East, probably what I'm wondering after the end of this chat is, okay, all sounds great, but am I actually going to get value from these people if I spend money, if I invest in such a service? How does an operating partner actually add value to a specific deal? And I guess that's for you, to share maybe like how do you feel you guys are actually adding the value?
It's three. I can think about 3 or 4 aspects to it. Number one is guidance, because people land here and they are lost where to start, what to do first, chicken or egg, and how to access this, how to set up that. You can't be a specialist of all jurisdictions around the world. You need people on the ground to guide you, and there are lawyers for that, and there are service providers for that. There are auditors, tax advisors, and us, fund administrators and Manco service providers. And we interact with each other. We interact with the lawyers. We interact with tax advisors. We interact with auditors. to exchange ideas, and sometimes we pool. You can easily have 2 or 3 of those operating partners on one phone call with the client, brainstorming on what's the best way to put together what he needs to put together. So there is a first aspect of understanding the landscape. There is a second aspect of avoiding big mistakes that can, put you under grave positions of, having your business shut down in a year time or 2, or stepping the wrong way with the authorities, etc. So being banned or blacklisted or something like that. And there is the third aspect is purely practical, which is instead of having everything in-house and building everything yourself, and the other guy next to you building everything by himself, this is a way of pooling resources by outsourcing whatever you need to outsource, or to someone who's a professional in that. You see, and that applies to the many activities that we do at Apex Group. And there's an a la carte service. You can pick and choose whatever services you want to outsource. And that outsourcing model is a global trend as well. The outsourcing of whatever is not core to your activity, and it makes you focus on what you need to be doing, which is making money for your investors, and making sure that the deals, the transactions are the right ones, and try to take off everything else off your back. So that's the third one. It's purely practical, financial, quantifiable.
Fair enough. I mean, I agree. I see that. As you see, we have a small chart here that explains more or less what we see as the value. I just wanna remind our audience that as we drift towards the end of this event, 30 minutes more or less have passed. I would love to hear if there is any questions. So our team at the back is checking the event chat if there is any questions from the audience. So I will give it a minute. If anyone has any specific question, please, this is the moment before we get towards the end of the live stream. So I will just wait a second to see if there is anyone. Otherwise, we will do like so we just get into the closing remarks. Yeah, let's confirm, because of course I cannot see the main chat. Otherwise, I would be rerunning the event over our voice. It would be very annoying because I've done it the first time and I wasn't understanding where the ego was coming from, and then I figured that's why the beginning was very weird. So now we tried and change it. I do have to say, well, it was very interesting. You clearly are an expert in the space, and it sounds like what you do on a day in day out basis. It is very much spot on with with what is needed right now. Yeah, exactly. What is needed right now. Just out of curiosity, are you not necessarily, you per se, but are you eyeing any other country or any other region that might be the next GCC in this space?
From where I stand now, I can't see what's happening outside. There's so much happening here in the GCC that I don't even, I'm not looking around. But I know that the group is expanding in countries in Africa. The group is expanding in Asia.
Yeah.
And even in Latin America, I mean, in all 3 continents, Latin America as well. So, yeah.
Okay, well, fair enough. Walid, it seems we have no questions from the audience. So it's either because you were really good and you answered everything, or because we were really bad and nobody's paying attention. Only time will tell us. But honestly, thank you so much. It was very insightful. I hope to see you again and enjoy your rest of the day. And thanks for taking part to our chat today.
Thank you, Andrea.
Bye.
Bye.